five handle on interest rates has come and gone. Unfortunately, interest rates have taken a little bit of a tick up this week. Obviously, as you could imagine why. It is because of the US-Iran conflict that happened this past Sunday. So let's break down why interest rates have moved up since past Sunday. In old historical worlds, whenever there was a Middle East conflict, typically what happens is there's turmoil, then you see a flight to safety. It's a very common term you're going to hear from people, flight to safety. You see a flight to safety, and what I mean by that is you're actually going to see US dollars flow into US Treasuries. And typically when that happens, interest rates come down because people want the safe bet. They want the US 10-year Treasury, which is the government promising 4.5% interest rates, okay? That is the typical route that you used to see. However, over the course of the past few years, that has shifted. Now recently, whenever there's Middle East conflict, you actually see interest rates move up compared to in the past when they moved down during those conflict times. And the reason why they move up is two major reasons. First and foremost, a lot of the belief that the conflict is going to last long periods of time, that's gone. A lot of people think, hey, usually we'll have a resolution, 7 days, 30 days, 45 days. So previously it's like, oh, this could be 1 year, this could be 5 years, right? All that's gone. A lot of it, the resolutions happen a lot quicker. So because they happen a lot quicker, you don't see that massive move. You don't see that move of dollars into treasuries. You don't see that flight to safety. And what you do see instead is you see oil prices move up, okay? So oil prices move from $68 to $75, and that has an immediate short-term effect, right? Gas, as you know, controls so much. You have shipping, you have travel, you have everyday consumption, and if gas prices move up a consistent amount, then you run the risk of inflation. First and foremost, the US consumer, cool, you have higher gas prices, that is painful. You feel that inflation. But then you see businesses, transportation, things like that. Well, guess what? If you have higher gas prices, that cuts into your margins, you cut into your margins, you need to increase prices, you run the risk of inflation again. And that is immediate because guess what? The cost of oil has went from $68 a barrel to $75 a barrel in 3 days. So we've seen this shift in dynamics, right? When this happened, it's funny, I actually got a few text messages. Hey, do you think this is going to lower interest rates? Because this has happened over the course of time. Mentioned, all previous conflicts, flight to safety, interest rates go down. But recently, like I said, the past 3 to 5 years, things have shifted. Not as experienced or not as expected to have that long term. Flight to safety gone. Now inflation risks. So that is the reason why we saw interest rates up. And again, I want everyone to highlight, it's not that bad. We may have solved that 5 handle. We're low 6s. Mortgage News Daily has us around 6.125, 6.5. So last year's lows were 6.13. I think today is 6.12. It's not bad, right? These are lower than at any point over the last 3.5 years, other than the last 10 days. So rates are going to continue to trend in the right direction. You have to be patient. It's not going to go to 5. It's not going to. And remember, also highlight that. Go back to our January report. We don't believe interest rates are going to fall lower than 5.5 this year. The entire calendar year of 2026, my prediction is the low we will see is 5.5. Saw 5.9. That's not that far off. So interest rates go up, they go down. Don't expect, again, you're not going to see this fall to 4. It's just not going to happen. And then as we go back up to 6.125, again, this is completely normal. So that's what we got. Any questions you guys have, feel free to reach out.